Hi, everybody. So this is Kristin with Flagship Title, and I am here with Todd Anderson, who is from Homespire Mortgage. And we wanted to give a talk about what's going on in the industry. What do we deal with every single day? What's going on with lending? Because we all know he who has the gold makes the rules. So, Todd, what is going on?
Wow. Well, I can tell you this much. It's been crazy the past few weeks. I think probably from your side and our side, we're seeing a lot of just changes throughout the things. And a couple of things that have changed significantly in our business is things like the non-QM loans, which were the things that people had before, like the bank statement onlys, people that really couldn't get qualified under normal lending guidelines. Those are all gone now. You can't get them. They just had to close up shop. And one of the things you're starting to see trickle through is, depending on the lender, is your FHA and VA guidelines. So here at Homespire right now, we're going to stick to a 660 where we were at a 580 before. We're going to go to a 660 guideline on our FHA and VA loans. The reason for it is a lot of people that just bought homes in January, February, and March, and why you're seeing this in the change in the marketplace is they just got laid off. And so the title company has been taken care of. The realtors are in their commission. The problem is, if that person doesn't make their first mortgage payment, well, now the loan's not guaranteed. And that mortgage company, including the loan officer, is being charged back for that loan. So there's a lot of risk out there in what you take. And so for us, there are some lenders that are going to do those 580s and below. As a real estate agent, what you have to understand, though, as they are doing those, one is that funding going to be there? We're seeing every single day where, the guy that does our credit repair for our clients, he got a call a couple weeks ago as he was wiring his money and said, hey, the lender that we were going to use and put you through is no longer going to fund your loan. Company like Impact Mortgage, they just stopped taking applications altogether. Chase Bank, there's a big article on CNBC if anybody wants to look it up. They announced over the weekend 700 minimum score with 20% down on all of their loans. So those are the big changes we're seeing. A lot of the big banks are not even doing jumbo loans anymore.
Yeah, so what's going on with that?
Well, jumbos isn't something that your typical lender like myself, we do them in most brokers, but we do have to broker them out in the jumbo world. And when you see a place like Wells and those guys take that away, we can still do them, but the days of getting a traditional 10% down, with no MI, they're really getting stricter and stricter on those guidelines right now. And so you're generally going to be in that 20 up to 30% down on a jumbo loan right now. And you're going to have, a 740 to a 760 or higher credit score to make that work. And just because of, how much risk do you want to take with somebody that's buying a, $800,000 or $900,000 house, and they're only going to put, 10% down. There's a lot of risk involved, even at that level, for the lender. And how much exposure do you want to have right now with all the uncertainty of if somebody's going to be laid off or not?
Yeah, absolutely. So just for, those agents that don't necessarily know what the limit is for jumbo, at what point is it considered jumbo versus a normal loan?
Well, $510,400 is your conventional loan limit. So we do have some creative ways. If your agents want to reach out to me, I'm not going to give away our secrets, but we have some ways that we are getting jumbo loans done, jumbo purchase prices done. Our clients are loving it, where they can still put 10% down. We have some creative ways that we're helping them get there. And the payment is actually much more affordable than they probably would have had otherwise. You are still able to get these jumbos done, but a lot of times you're playing points. And so that's just back to, somebody that's going to say, hey, I can still do that 580 FHA. What they're not telling you in these videos is a lot of times that customer is going to have to pay two discount points. So if you have a $200,000 home, that's another $4,000 of money they have to come up with, on top of closing costs. So if you already have that FHA client that has 3.5% down, they're already trying to negotiate probably closing costs from the seller. Where's the other $4,000 going to come? So yes, they can do it. Are they likely to close on them? You're going to have that buyer in that situation with a lot of money and probably some reserves. There's going to be a lot of layovers in there where they're going to want 2 or 3 months worth of reserves. So they have that security knowing they're going to close that loan.
Yeah, absolutely. And I know that, so stimulus checks are obviously
Yep.
going out now. And so when we take that in, or when a customer takes that in, how does that affect their ability to qualify? Does that money even take into account? Because technically that's not income.
It's technically not income. It could technically help for a down payment, but here's the person that's getting the stimulus check that really needs it. The last thing they're probably thinking about in this moment is buying a house. If they're truly needing it, they're trying to just put food on the table for a good majority of the people that are getting it. Unemployment's up, and this morning there is some good news. Hopefully we'll slowly start to reopen the economy, and I think we'll start to see, once that happens, hopefully we'll get back to normal lending restrictions. But right now, could it help? Yes, it just has to be season sourced. But that couple $1,000 or $1,200, is it really going to help somebody get over the edge? It could, but it probably isn't really going to help. More than likely, that person's trying to use that money to put food on the table right now.
Now, I know that we have posted, and I'm sure everybody saw the post about forbearance, but let's just touch on that just a little bit. For those people that, are in a tight bind and that stimulus check is just not enough. What is forbearance? How does that work? And, is that something that people should consider?
Okay, that's the $1 million question. You're seeing those posts everywhere from everybody, and they're so long, and people want to read them and want to understand. Here's what I tell everybody. Call your servicer individually and get it in writing of what the actual terms are. Okay, so a lot of times in forbearance, I can call and say, hey, Kristin, I can't make my payment. I'm going to be laid off. And they say, oh, you're going to say, great, Todd. Here, we're going to take your April, May, and June payment, and we're going to go ahead and let you skip those. What people don't realize a lot of times these situations are July 1st, you're going to be due for April, May, June, and July's payment. You're going to be due for 4 mortgage payments. Well, the average day person, let's say they get back to work in June, which we hope back to work before then, their income is not going to be enough to get all of those caught back up. So make sure when you call, they're actually doing a little bit more of a modification type service for you, where they're going to put those payments on the end of the loan and not just hold them for you. Also understand you have to ask them the question how they're going to be reporting it on your credit, because something has to go there every month. We just need to know what's going to be recorded so people aren't damaging their credit. Whether it's on your mortgage, your credit card, your car, make the call. Make sure you have a clear understanding with each servicer, because everyone's going to be different in how they approach every customer.
So basically, in essence, find out, where is that payment going to be coming from in the end? Is that going to be coming in, after your forbearance period, and it's going to be on top of whatever payment you have?
Correct.
If you're going to modify the loan and put the payments on the back end,
Yep.
So basically, in essence, you would pay it after you've paid off the loan. That would be,
right,
an interest-free payment at that point.
Exactly.
Or what is that implication for your credit score? Because obviously, if you're ever thinking about doing anything after this period is over, you don't want your credit to be in the tank because you had to do this forbearance.
Exactly. This isn't something people asked for. People didn't ask for a global pandemic. I think we're all in the same place right now as you and I are sitting on Zoom. And I think Zoom has probably become the most popular thing in the world right now for people to get along.
Yeah, dang it, I didn't get any stocks.
Exactly. It's, I think where people just need to understand is the patience in coming along with this. And one of the other questions you need to ask your servicers, how's this going to affect my escrow account? Because if you're not making those payments, that escrow account's not being built to cover your taxes and insurance when due. So you're going to probably have that escrow shortage. So you need to also prepare yourself for next, December, January, because if you take these, forgiven payments, however they put them, whether you're going to try to make all 4 payments or they're going to catch you up over a period of time, whatever your servicer works out with you, make sure you understand that, because you're going to have that escrow shortage in November when your taxes are going to get paid. And so your payment come January, February is going to have to make that up at some point. So everybody just kind of needs to be prepared for that, as those things will be due.
Yeah, absolutely. That's a great point, because, every servicer obviously has a cushion, but, that cushion is not always enough to make up for 3 escrow payments.
Correct.
So that's a great point. I appreciate that.